Hello and welcome to Market Vibes by CA Connect. Let's dive into what shaped the global economy in the month of September 2025. Starting with interest rates, the headline of the month came from Washington. On September 17th and 18th, the Fed delivered its first rate cut in over an year of 25 basis points, bringing the target range to 4 to 4.25%. Chair Jeremy Powell called it a mid-cycle adjustment, saying the goal is to support growth without letting inflation slip back. Markets took it as a good sign and hoping for one or two more rate cuts before the year ends. Coming to the United Kingdom, the Bank of England stood its ground after its rate cut last month, holding rates at 4%. With their inflation still high at around 3.8%, policymakers can't declare victory yet. It wants to protect households from high prices without slowing down the economy too much. Across Europe, the ECB stayed on pause. Inflation is roughly 2%, the target, but growth remains soft, and officials want more data before making a move. So for now, they are waiting and watching. Coming to China, the central bank avoided rate cuts but helped the economy by making it easier for companies to borrow. Their goal is simple: keep things steady while managing challenges in real estate and exports. Coming on to inflation, the inflation stories in September were a tale of four economies. In the US, headline inflation eased to 2.9%, and core CPI was around 3.1%. The trend is improving, but housing and services keep pressure on the Fed. In the UK, inflation hasn't moved much, still 3.8%. Energy costs have cooled, but food and rent are keeping prices high. And across the euro area, inflation settled near 2%, giving the ECB some breathing room. In China, prices are flat, and in some areas even falling, a sign that consumer spending still isn't back to full strength despite all the policy support of the government. Coming on to equities, markets moved fast. In the US, the Fed's rate cut gave markets a lift. The S&P 500 rose 3.9% and the Nasdaq jumped 6%, powered by strong results from tech and AI stocks like Nvidia, Microsoft and Meta. In the UK, the FTSE 100 rose about 2.8%, helped by a weaker pound and strong earnings from global companies like Shell, Unilever and BP. Across Europe, the Stoxx 600 added 2.6% as industrials and banks climbed on optimism that rates have peaked. Coming on to China, the Hang Seng jumped nearly 5%, led by EV makers and tech names like BYD and Alibaba, as investors grew hopeful about new economic support measures expected from the Chinese government. It was a month where small policy shifts sparked big market moves. A reminder that confidence is as powerful as cash. Moving on to commodities, which had their own roller coaster in September. Gold hit a record high, around $3,700 per ounce, as investors turned to safer assets during policy changes and US political tensions. Silver also followed, reaching a 14-year high thanks to demand from electric vehicles and solar panels. Oil stayed near $70 a barrel, supported by OPEC+ production cuts. And in the food markets, US soybean exports to China remained close to zero for a second month, highlighting the ongoing strain in global trade. Coming on to the South Asian region and the story of India's remarkable balancing act. India's retail inflation dropped to 1.54%, an 8-year low, thanks to the cooling food prices and targeted tax relief. That gives the Reserve Bank of India room to cut rates again if growth needs support. But inflation isn't gone completely. Service and housing costs are still firm. The RBI knows it must move slowly, as too many cuts too fast could ignite a rebound. What's really keeping India strong is consumer demand. Ahead of Diwali, car sales are booming, electronics are selling fast, and smaller cities are leading this rebound. While exports are weaker due to higher US tariffs, domestic spending is keeping growth on track. Just as September ended, another big headline hit the markets. On October 1st, the US government officially shut down after Congress failed to agree on a new budget. The first shutdown since 2019. The impact could be serious if it lasts long. It could delay vital economic data like jobs and inflation reports, which will make it harder for the Fed to plan its next steps. Investors reacted to this immediately. Gold prices jumped, treasury yields fell, and the US dollar slipped. If this continues into October, it could slow US growth and unsettle global markets, just as the world was hoping for stability. As we move into the final quarter of 2025, will the Fed cut again or pause amid shutdown uncertainty? Can the Bank of England and ECB follow without restocking inflation? Will China's stimulus turn cautious confidence into real growth? And can India's low inflation fuel sustained momentum into 2026? September showed us an economy in motion, with falling rates, rising markets, and new uncertainties. Thanks for joining me on Market Vibes. Stay tuned for more market updates to come.